As a momentum trader, how do you trade a day that looks like this? When it starts off, you don't know it's going to look like this. If you are feeling bullish, even from looking at this, that sort of makes sense. You see your overnight high is above your yesterday's high a day. You're above the value area high. You were setting up a bull flag on the hour chart that looked solid. I was watching it take place first thing in the morning. You can see it starting right around 5 o'clock. Nice little bull flag here. Now, if you were on a higher time frame, which, probably not for early morning scalping, you can see in the larger time frame that the flag was setting up. If you drop down to the 15, it looks a little bit more choppy, but it does look like there may be a good setup for the previous value area high and previous high of day. But then when you get to the open, what are you going to do? Are you just going to take out this candle? Probably not before you go long, right? It's very low volume. It's opening up right on the line. You're going to need an initial reaction, but unless you are very fast and off the first minute, which is usually not the best idea, it's very 50-50. Volatility's high, and you can get wicked really easily before anything finds its sort of true direction. You're going to wait. So your first 5-minute candle, you shoot up with great conviction. Next 5-minute candle, pop right back down. Now you do get a little bit of a sweep on the open here. And if you look at your volume, bit of an indicator that, hey, this thing has a good chance for a turnaround. Now, conservatively, you're going to let this close. And again, maybe let it get 3/4 of the way up. So let's say you go in 3/4 of the way up on this candle, on the reversal. So you're going in around 34. It's a good, decent trade. You take it, right, maybe back right up to overnight high, 400. That's a great trade if you held on to it. I didn't do that. That was not me. I was looking for really a breakout to the 480 point. I thought, if we can clear overnight high, there is a larger resistance up here in the higher time frames. So if I can just target 480, I'm feeling really good. And from the overnight high is 400. That's a great trade for me. So that was my momentum trade that I was looking for. Now, I do believe I got in over the break of this candle initially, and I don't think I really got it moving. So somewhere around 9:45. So I took the 15-minute, it looks like, opening range break. You open up, that makes sense. So we get through here, we pop up, we hold, and then I actually, if I remember correctly, I believe I bought the break of this wick at 414, looking for 480. Now, I knew ISM and news was going to be coming out. I was sitting pretty close to it. Essentially, my hold was going to be right around maybe the overnight high, maybe just at 377 at the top of the break. And when the news came out, it wicked right up first. I considered having a first stop here at 37, but I was sitting on just one contract. So I put it at 480, and it got to 455, and it immediately rejected. Like it didn't even, it's not like it came up here and floated around for a minute and thought about it. It popped up here, and in only a few seconds, it was right back down. So I had to jump out of the trade. At that point, I thought, okay, let's see what the news wants to give. It doesn't quite go down back to the open, and it starts to come up, and at that point, now it doesn't want to break anything. It doesn't want to break the top of the range, not breaking the bottom of the range. So I immediately knew right here that momentum was sort of out the window, right? And look at the EMAs. They're worthless. So what do you do in that sense? Well, you have two options. You can either be a one strategy person, which is probably a good thing to do, at least in the beginning, to just stick to a single strategy. And if your strategy isn't there, you wait for the next day. You wait for the strategy to appear. Again, most likely in the window that you like to trade in. But if you're feeling a little daring, if you're feeling like you're still trying to find a way to make the market work for you without forcing anything, then you got to switch up the tool in your tool bag. So in this sense, we're not getting breakouts. We know we don't have momentum. EMAs are crossed. They're kind of useless at this point when they're tangled up. Now, normally I've said in the past, well, that's no good. I'm going to stay out of that trade. I immediately suspected that we were just going to have a small range day. So I gave it some time. I left the terminal and I came back. When I came back, I took off the EMAs and I made sure to have, well, not here, the value areas. We'll go right to about here. So if we look at the value area, and I'll take off the opening range just to clean it up some. I'm going to drop down to the 1. You can see very clearly value area high where it's a premium, value area low where it's a discount. And after we could not sustain a break over the overnight high, we mainly remained within range. So at this point, you stop buying on the highs or selling on the lows and you flip it. You buy on the lows and you sell on the highs. So if we back this up, let's say you waited till about 11. That's usually when it's going to start slowing down at this point. Here you can see that the value area is high, but it's still being supported by previous value areas high from yesterday. So it's holding that support, but not incredibly well. So we're going to see what happens if that value area low can start to come down. And what you have there is then a double confluence. So what yesterday's premium was, this was considered expensive yesterday or on Friday. And now today it's considered cheap. But again, there's no momentum. However, what you can do is you can reduce your risk. So you let it get down to value area low and you have two choices. You buy directly on the value area low or you let it recapture it. Personally, because I'm not great at ranges, I'm being honest about it, I'm just going to let it recapture. So let's say you missed the perfect one and we'll go to the more difficult one. And then I'll show you how I messed up and still made money on the last one. So I'm going to trade a little bit outside of my timing range today. Speaking of yesterday, this is what I did. Now, and I'll be honest, at the end of the day, I was only neutral because my momentum trades didn't work out. So at this point, I'm in the red by a small amount, a couple $100. And I feel comfortable enough and I have time in my day that I can try this. So we break value area low. We start to pop back up. We hold it pretty well. Now you can go in here on your second green candle. It's what I do because I'm looking for low risk here. And I'm probably only looking for maybe point of control, especially since we're not reaching value area high up here anymore. You take one big dip. Now, maybe that pulls you out and that's okay, right? Let's say you go in on 271, right? You get up to 86 and it flushes you out. And let's say it pulls you out at 264. And 264 is where the open was. So you can even go a little bit low and say you went in 10 points, 271, 261, not bad. Right, $200, you get wicked out, no big deal. It recovers again. So once it recovers off this flush, it comes back up. You go again on 268. And guess what? This time, 306. Right to point of control. So you lost 10, you gained 40, you're up 30. All right, so now we have to wait one more time and see what happens when value area low or value area high is touched. We come over here, value area low today is still the top of value area high from yesterday. So once again, we wait for a recovery. Comes down, flushes, comes back up. You go in at 273, but you get rejected at VWAP. Right? Comes back down. You're not stopped out just yet. We're going to take one more recovery, but 288 we get rejected again. At this point now, you can probably start to break even because you already have an initial rejection of VWAP and you have a second rejection of VWAP. You don't need to worry about the EMAs. They're all crossed up and tied up anyways. You're just looking at right where premiums and discounts are, where weighted averages are, point of controls are. So at this point, you can probably go break even on your long, but what are you setting up for? Two rejections. A nice bear flag is beginning to set up. I'm going to look to my left. I'm going to find out the best place that buyers were really starting to hold, which was right here. So I'm going to go a little bit below, and I'm going to mark out 249. This is where I had my short yesterday. So I lost here, made a little bit of money here. I didn't take it all the way up to point of control. Here, I went long. I got stopped out for about neutral. And once I saw the second rejection, I saw a good chance to go short here. And now my target, obviously, was point of control from Friday. I looked left, and I didn't think much of these overnight lows. Now, since I was in a day of ranges, I started my day with losses. What I was looking for was just a trailing stop. So once I broke, I think once I got down to the close of this candle, right, I brought my stop to neutral, or to zero, to flat. It wicked up, came back down. Once it wicked up, came back down, I brought my stop to 239, right, just a little bit, right, so that's 10 points. Once it flushed the bottom of this candle, I trailed it down to the close of that candle at 224. It came down a little bit more, but it did, I think, eventually just wick me out around 224. So what is that, 39.29? It's about what, 15 points? No, 25 points. So 25 points there, and that ended my day pretty clean. That put me back up in the green for the day, and I stopped. The point of this is, if you're a momentum trader and your EMAs look something like this, and your price action looks like this, you have two options. Don't trade or range trade. When you range trade, you don't want to necessarily find the extreme bottoms. You want to use your fixed range volume profile. This will tell you where on the day price is discounted and where price is premium. And you flip it. You buy the low, you sell the high. You can, on a multiple confluence, and a multiple confluence be such as the open value area high from Friday, value area low from today. You have a lot of indicators saying like, hey, what was previous resistance is now showing as support. Let's buy here automatically. If you want to be a little bit more conservative about it, then just wait for the reaction, right? Because what you don't want is you don't want something like this to happen to you. I mean, there was a setup for it to see that there might be a flush here, but you don't want to just buy and then where's your stop, right? If you just buy here 265, I guess you could put your stop at 243. It just feels like it's a risky 20-some points just because at any time it might want to take out the liquidity of this low. It might want to just flush. And so I try not to get wicked out needlessly. I try to be wicked out based off of the most current pattern. And this here told me that these are where the deepest lows were currently. And I felt like, hey, if we could push, I did risk that we were going to just flush this here and then rip back up. But at that point, I wanted to give it a chance, right? I was holding on. When I went in at 249, I think I wanted to see quick action, and if I didn't, I was only going to risk 10 points. Again, right, arbitrary, but I'm really trying to find a little bit of momentum within the range so that I can quickly move my stop, get at least 10 points. Once I get 10, start trailing that down, especially in a day like this, because I like to go in, get momentum, and find a 50-point move or 40-point move right away. I don't want to sit here struggling to make 10 points. So it's a short video. Very simply put, if you're a momentum trader and this is the chop you're seeing, walk away or attempt the range. And I say attempt the range because I've been terrible at range trading for some time now. I think I always got in too early or got in too late. And yesterday I found I did better at range trading than I even did at momentum trading. So it's a learning curve. You know, be slow at it, size down like I did. I halved my size when I started range trading. I trade one full-size contract. Instead, I was only trading a half contract or a third contract just to get my feet wet, get a few points. If I was off, I wasn't going to lose much, which is why it took a handful of trades to actually get back to neutral. It's because I was trading full-size, the morning momentum, lost those trades, and then I traded half-size range, which means I needed some either more quantity of trades or pretty sizable length of trade, and I wasn't getting the length of trade. It really wasn't there. So I just took a couple small scalps and I brought myself back up to neutral. Also remember, if you have a red day, and it's not bad, just leave it a red day, right? Again, attempt 3 trades. I've been trading for a long time. Yesterday was Monday. I was comfortable trading a little bit more. I had the time to do it. But typically, 3 trades, I'm out. 2 wins, I'm out. 2 losses, I'm out. 1 win, 1 loss. I'll usually take a 3rd trade to see if I can neutralize or take that out of a neutral state. If you have questions, comments, leave it below. It was a pretty simple setup, pretty simple day outside of momentum. And hopefully today we actually get some movement out there. All right. Wish you the best. See you tomorrow.